Paul, and I know we spoke just about a week ago, and I know you're still pretty bullish when it comes to the dollar, but I'm just wondering, what's going to be driving the direction of FX moving forward here? Is it more about the Fed and the faster tapering, or is it more on these Omicron headlines?
Well, I think in the very short term, the sensitivity to the headlines about the new variant is clearly quite powerful. I mean, I think that's changed the dynamic for a number of different exchange rates. You know, you look at dollar yen, for instance. If it was still only about the Fed, I imagine that it would be at a higher level, but that's not the case. So there's this obvious risk aversion has come through and been impacting a number of different instruments. But to me, I still think that, you know, the bigger driver beyond what's happening with the variant is ultimately the runway and path for the Fed over the next few months and quarters. I think that will ultimately still prove to be very dollar supportive. So we need to separate the time frames right now. I get the headline risk. It's very high. It's adding to some fears in the market. That's not going to be going away so easily. But we can't, as I said, lose sight of the bigger picture.
How much more upside is there for dollar? How do you look at it in the lens of G10 versus the rest?
Well, our thinking, at least versus the major currencies, is you probably got a few percentage points over the next few quarters. I think that, look, let's keep it in perspective. We like the dollar. We believe that the dollar should be strengthening. We have done so for some time. But what would make us think differently is probably the real question to consider a much more powerful dollar. And if we had the view that global growth was going to be softening a lot more than expected, that would probably be a critical factor in reshaping our view to be a lot more dollar positive than as I said, what we currently are. But again, we're talking about modest dollar strength. I think that's the right profile to have going forward.
Riz, it's interesting. You mentioned about the yen, the moves we've seen, given the headlines when it comes to Omicron. Do you think we've reached a top when it comes to dollar yen? And do you think the traditional havens, at least, are a safe bet in the short term as we wait for more details on the efficacy of these vaccines and what Omicron actually brings and how it's going to actually impact the global economy?
Well, I think the uncertainty is very high. I mean, there's a massive blind spot here. So I don't think anyone can be that confident in saying that, well, it doesn't look that bad or could get better soon. Frankly, I don't think any of us are scientists, and we're trying to follow the same type of news to try and back out some strong conclusions, but I think it's very difficult to do so. So in other words, what I'm getting at is I think that the window to look to try and sell some of these safe haven currencies as you define them, like the Japanese yen, I'm not particularly comfortable with that in the very short term. The reason why, as I said, I mean, the headline risk is still quite high.
I know one of your conviction calls is to sell euro dollar. I mean, the virus spike was already weighing on this currency even before Omicron hit. Do you think that the market has it right in terms of pricing in the weakness that we could be getting in the quarter?
I think so. I think, as I said, directionally, I think that this exchange rate will be coming down. Now, what you do see in very short-term windows is that euro doesn't go down that easily. You get squeezes where actually the euro is going up, and I think that's been a functioning of positioning dynamics in the market. But you know, the longer-term trend to me hasn't changed in terms of the outlook. That is, I think that it should be coming down. We could get pockets of nervousness, which people have to cut their positions, and we know that a lot of people have been funding out of the euro, whether versus the dollar or, say, emerging market currencies. But when you have that positioning adjustment, I think it's just going to be temporary in nature, and people will be looking to re-engage to sell the euro. Any type of stability or lower volatility coming back into the market will be very conducive for that type of view.
In terms of oil, I'm just wondering, we're getting closer to that OPEC Plus decision. We see oil in a bear market. What's your outlook when it comes to these oil currencies now?
Well, we've probably been, it's a little mix and match, actually. I mean, frankly, we're still quite constructive on something like the Russian ruble, which is a very sensitive currency to the oil price dynamics. But it's a lot of it's a function also of how monetary and the fiscal framework is for Russia. But for the Norwegian crown, we felt that it was, you know, overcooked for a while, particularly versus the euro. So even when the oil price was trading at higher levels just a couple of weeks ago, we felt that a lot of the good news was in the price. So is it the time to try and re-engage and like that currency at this juncture? The short answer is no. I'd probably try to find an opportunity on a relative value basis, perhaps versus another European currency like the Swedish krona. But again, the entry point over the next few weeks is probably, again, not very supportive of that type of thing.
You mentioned that the Aussie kind of stands out to you. Why?
Well, part of it is just this reopening strategy that we know has benefited currencies repeatedly over the last year or so. and Australia is still in the early stages of that. And if there's going to be potential rate repricing, which hasn't been as reflected in, say, the Aussie curve compared to some other markets, the capacity for this currency to actually go through some positive rate repricing and be beneficial to it, we think actually makes it stand out. I also think we need to look at the structure of the balance of payments for Australia. I mean, it's very supportive compared to something like the New Zealand dollar. So when we benchmark those two currencies, actually over the next few months or so, we're more biased towards the Aussie dollar doing better than the Kiwi dollar.
That's interesting. Does that call hold if, in fact, the RBA is going to probably hold off from hiking rates or tightening by 2024, which is kind of what they've been kind of keeping that stance?
Well, it's a good question. So we know that the RBNZ is, again, on the runway to be raising interest rates at a faster pace than the RBA. But, you have to look at the expectations. And a lot has been baked into that profile for the next, few years. Now, we also think that the RBA will start earlier, perhaps in 2023. But it's that capacity or that potential that if you can keep on getting good news, that perhaps there has to be more factored in. So that expectations component, in contrast to New Zealand, as I said, a lot is already there. Where do you go in terms of extra good news is not particularly very obvious to me. Whereas for Australia and the currency, I think that potential is greater.
And we just talked last time about this divergence we're seeing with dollar dynamics and the renminbi, and you said we could be seeing that for a while. But I'm just wondering, how important is that anchor of having a stronger renminbi against EM Asia, for example, here when you look at some of the proxies?
Well, that's a great question, and obviously it's a big anchor for many, not only Asian currencies but the emerging market complex altogether. The fact that it's not really doing too much. I mean, I categorize it as almost like a volatility suppressant. But look, I think that this stability can last for a while longer. We haven't changed our longstanding view that eventually there'll probably be some modest appreciation just in terms of how the changes of the balance of payments could play out. But that's very slow moving. It could still take a good few quarters for that to unfold.